Let me welcome on board Rishi Sanghvi, MD at Sanghvi Movers, joining in on the show right now. Rishi, hi, good morning. Good to have you on the show. Walk us through how the quarterly performance has been and how is it that you're seeing demand going forward? What do you hope to scale up in terms of revenues for the full year?
Hi, good morning, and thank you for having me. So we did about 486 crores of top line last year with a bottom line of almost 112 crores. And our average capacity utilization has been about 80% with a blended average yield of about 2%. Looking forward, we feel that the economy is firing on all cylinders and there is a tremendous capex upswing. Refineries are going to add about 80 million tons per annum, thermal power about 25 gigawatts, wind power about 5 gigawatts, steel about 13 million tons per annum, and cement about 80 million tons per annum, which is a 10-year high. All of this capacity addition is going to lead to an increase for the demand of cranes. And we see the top line increasing between 5 to 10% and yields being maintained around 2%.
10% growth on the top line sounds a bit tepid. And since you talked about the average yield being around 2%, could you walk us through what the usual global average is? What kind of numbers are considered healthy?
So, in fact, India is one of the highest yield markets in the world. Globally, the cost of borrowing, the operating costs are much higher. So the yield in international markets is significantly lower to what we have in India.
You talked to us about the 5 to 10% growth and the yields being healthy at around 2%. But could you also talk to us about how the gross margins and EBITDA margins will shape up in the coming year, and what kind of inventory do you have lined up with respect to order book, etc.?
Absolutely. So last year we did an EBITDA of roughly 60%, which was a 12% growth year on year. This year we expect the EBITDA to go to improve by about 2 to 3%. We believe that we will end the year with 100 crore plus PAT. Incidentally, our PAT for last year was the highest PAT recorded in the history of the company. Looking forward, we have an order book of 300 crores, which will be executed in the next financial year. So we definitely see the top line growing next year.
For a 264 crore rupee capex, right? If I'm not mistaken, for the full years, for the full year that is. How is it that you plan to utilize this? What is the crane addition, for instance, that you're looking at?
So we have already approved 264 crores, which has been approved by the board of directors. And we have already executed 200 crores of that capex within the first quarter itself. All of the capex that has been committed is backed by orders, and all the cranes are moving from the docks to straight to the project site. So the entire capex that is being invested in this financial year will add to the top line, and therefore there will be growth on the top line being driven by this additional capex as well.
Sizable debt on your books, right? Of 161 crore rupees. How are you planning to retire that?
So we have generally we fund our capex through internal accruals. So 30% of our capex is funded through internal accruals, and balance 70% is tied up through long-term financing. We have reduced our debt to equity to 0.9 in the past year, which is historically one of the lowest debt to equities during the history of the company.
Rishi, given the fact that, it is an election year and, the government as well is focusing a lot on completing a lot of infrastructure projects, you've got the G20 summit, etc. How well prepared are you in terms of this demand, and what's the outlook on your capacity utilization increasing?
So it's not only the elections that are driving demand. India as a country for the last 10 years has been starved for infrastructure projects. There are roughly about 20 airports that are being constructed across the country, and every single tier 1 or tier 2 city has an elevated or underground metro under construction. So we see demand improving, and in fact through the year. And with that, we see a lot of our capacity utilization being booked. We are already at 80% plus capacity utilization, and we see that improving to about 82 to 85% for the year.
Rishi, thank you so much for that. But just wanted to understand, since you mentioned that you've done the bulk of the Capex already and you have utilized, 200 crores already, do you see a possibility that you'll have to increase your Capex plan mid-year?
We might reevaluate our decision to increase our capex based on demand and the overall macroeconomic situation somewhere in Q2 or Q3, but all of it would be subject to the approval of the board of directors.
Thanks so much, Rishi, for joining in, giving us the latest on Sanghvi Movers. That's the management as well, talking to us about capacity additions being at a multi-year high, and they are seeing about a 10% growth in their top line. 408, that's where the stock is at. But